Good day and welcome to the PSG Wealth Local Solutions for the month of November. We'll start off this presentation with a market update looking at asset class returns across both local as well as offshore. Please be aware that this graph, as well as any other graph, as well as tables that will be shown in this presentation, are all reporting in rand terms. Starting off with 1 month return, and we'll start from the left hand side moving on to the right hand side. What we then see is from the local asset classes, local cash were lagging at a marginal 0.04% return, whilst the local bonds as well as property and equity were able to give a comfortable positive return, with the local property leading at 17.47%. However, looking at the offshore asset classes, we then see what would really mimic an expectation of longer investment period. That would be the more aggressive asset classes would tend to outperform the more conservative asset classes, and this is true in this case even though it's 1 month return, with the offshore cash at a negative 4.75%, followed by bonds at a 3.02%, with only the property as well as equity returning a positive return for the month of November. Property returning a 4.66% and equity at 6.99%. Looking at a longer period, and in this case the longer period that we've taken would be the 7-year return. And starting once again from the left hand side moving to the right hand side, looking at the local asset classes. From the local asset classes, we then realized that the more conservative asset classes were able to outperform the more aggressive asset classes, with the more conservative taking a minimum of 6.8% and the highest being 8.02%. And these are cash and bonds respectively, with the local property and local equity underperforming conservative returns, property being the least to perform at a 3.44%, whilst the local equity is at a 6.63%. Moving on to the offshore. Theoretically, what we see from the offshore returns is what a market participant would normally expect, that the more aggressive asset classes, as you invested for a longer period of time, they will tend to outperform the more conservative asset classes, and we do see that being reflected on the offshore asset classes. Cash returned a 7.05%, whilst offshore bonds were able to return a 9.09%, with offshore property and offshore equity returning 11.45% and a 15.14% respectively. Now let us take some time and dive into our local solutions. And what this table shows is ranking each of our underlying funds amongst the number of underlying funds registered within that assessor sector, and then it ranks them for a period of 1 month through to 10 years. And for funds that have a period of more than 10 years, we have since inception, and those that have less than 10 years, we still have a since inception rank. And I would like us to firstly focus on since inception, and what we can see from that table is that 3 out of 5 funds are ranked in the first quartile, whilst 2 are ranked in the second quartile, and that would be a good return for our investors. Whilst we also take another longer period focus of greater than 4 years, meaning starting from 5 all the way to 10 years, all of our funds are ranked in the first or second quartile. With the focus of 1 to 4 years, we see a challenge that came true within our underlying funds, within our solution, that being the PSG Wealth Fund of Fund, the PSG Preserver Fund of Fund, as well as the PSG Moderate Fund of Fund. There was a couple of challenges within this time period. However, if we look at shorter term period as well, what we then notice is all our funds have managed to return to the first or second quartile ranking, with the exception of the PSG Wealth, PSG Wealth Enhanced Interest Fund. And for this one as well, because of the team having continuous research and update of all the underlying funds that exist within the funds, that we haven't had concerns about our underlying funds, and we still believe that the portfolio has been set up in such a way that it will be able to outperform the sector average and provide to be invested in its mandate and be able to assist our clients to achieve their financial goals. The next slide should actually show within all these underlying PSG solutions, which fund amongst the underlying were able to outperform and which one lagged. And this, please note, it only focuses on the month of November. And what we then see from this table, as I had mentioned just earlier, is each of our solutions. Then we look at amongst the underlyings of that solution, which fund were able to outperform, which one was able to underperform compared amongst themselves. And lastly, we have what's the minimum investment period for that fund and what was the return for that minimum investment period that's recommended. And what we then have is for the PSG Wealth Enhanced Interest Fund, it's the PSG Asset Management SEGI that outperformed and was lagged by the PSG yield, the Prescient Yield Quant Plus. It returned 6.1% for their investment minimum period. Moving to the next one, the PSG Wealth Income Fund of Fund, we have Coronation Strategic topping the underlying, whilst Momentum Income Plus lagged the underlying. The fund overall were able managed to return a 6.79% for an investment period of 2 years. Whilst the PSG Wealth Preserver Fund of Fund, we have the PSG Stable leading the underlyings, whilst the Sim Inflation Plus lagged the underlyings, returning a 4.01% for the minimum investment period that is recommended, which is 3 years. The PSG Wealth Moderate Fund of Fund, we have the PSG Balanced Fund leading the underlyings, whilst 91 Opportunity Fund lagging. And this returned a 4.61% for a period of 5 years. And lastly, the PSG Wealth Creator Fund of Fund had the PSG Equity for the month of November leading the underlyings, whilst Fairtree Equity Prescient lagged the underlyings. And overall, for a period of 5 years, the investment period that's recommended, we have a 4.1% return for the fund. We also have a mechanism that we use, which is a quantitative radar screen, where we look at a fund that has underperformed the sector average for 1 month, 3 months, 6 months, as well as 1 year. And for the month, when we looked at the tables, it was the Sim Balance Fund that was able to appear within the quantitative radar. And given the approach that is taken by the PSG Wealth team of regularly reviewing our underlying funds as well as the bench, where we continue to research, and a fund that appears within the radar screen is looked at and reviewed again, and to see if there are any structural concerns that we should have about. And as of this point, we do not have such structural concerns when it comes to the Sim Balanced Fund. As a result, we still believe that the portfolios are set up to be robust and to be able to achieve the client's investment goals. Thank you for the time to listen to this podcast.